Hey, everybody. Welcome back to the Blockware Intelligence Podcast. Hope you're all doing well. Before we get into the show, let me tell you a little bit about our sponsor, FTX US. FTX US, one of the largest crypto companies in the United States, is the safest, most regulated way to buy and sell Bitcoin, Ethereum, and other digital assets. You might have heard of FTX from their partnerships with Tom Brady, Steph Curry, or the recent Super Bowl commercial with Larry David. With FTX, you can trade crypto with up to 85% lower fees than top competitors. There are no fixed minimum fees, no ACH transaction fees, and no withdrawal fees. You can also use the FTX app to buy your favorite NFTs with no gas fees, supporting both Ethereum and Solana blockchains. Download the FTX app today in minutes by going to ftx.blockwareintelligence.com to earn free crypto on every trade over $10. Again, that's ftx.blockwareintelligence.com to get started today. Hey, everybody. Welcome back to the Blockware Intelligence Podcast. Today, we have two extremely special guests on the show for you guys. We've got Yassin, Elmandjra, and David Puell, both from Ark Invest. Guys, thank you so much for taking the time to come on the show. How are you doing today?
Awesome, man. Thanks for having us.
Doing well. Thanks for having me.
So, David, this is your second time on the show. The first time around, we kind of dove into a lot of literature stuff that I don't think a lot of people have heard you speak about, and also the audio quality was a little choppy on that one. So I'm glad we got it sorted out for this one. We're ready to rock and roll. Before we kind of dive into, I guess, the meat and potatoes, can we first start with kind of what are your roles at Ark? Yassin, maybe we start with you and then go to David.
Sure. So I am a crypto analyst at Ark. I basically exclusively cover both crypto on the research side and then the product development side. I joined about 4 years ago. And, at the time we were kind of just evolving our thinking on crypto. Ever since have sort of been focused on figuring out ways to both help institutions get the most efficient exposure to crypto broadly, and then kind of bridge the educational gap between sort of the pseudonymous Twitter accounts that are tweeting, major signal on where Bitcoin's going, and the sort of larger, more traditional institutions who have no idea what's going on. So, yeah.
David?
Joined Ark January 2022. Recent alumni. Very excited. A research associate, mainly invested in on-chain research and crypto research in general. Pretty excited about what lays ahead. I think there's a lot to do still on both the on-chain analysis field and the institutional understanding of on-chain analysis. So trying to take it to the next level, basically.
That's sick. Hey, so I want to ask you, as far as Ark's interest in Bitcoin goes, what got you guys, obviously, you've been on the forefront of innovation in general for a long time. What got you interested in Bitcoin? What was kind of that timeline for you guys? And then aside from Bitcoin, the asset class, and maybe kind of want to give, high level thesis on the asset class itself, what got you interested in on-chain data itself, and kind of, walk us through that process of how that began?
Sure. So Ark was actually the first public fund manager to gain exposure to Bitcoin through GBTC back in 2015. So at the time, Bitcoin was really trading only around $200. But the history of Ark's relationship with Bitcoin actually predates Ark. Specifically, so Kathy Wood, for those not familiar with Ark, maybe taking a step back, we're an asset management firm that focuses exclusively on disruptive innovation. So we thematically invest across, primarily the public equity space. We have 5 major technology platforms: genomics, DNA sequencing, energy, robotics, automation, AI, and one of them being sort of crypto and blockchain broadly. Prior to Kathy, our CEO and founding of Ark, she actually had a first initial brainstorm with our current director of research back when Bitcoin was trading at $11. But at the time, being at AllianceBernstein, there's obviously not the maturity to do anything about it. It was more of a, we invest in tech and we're sort of at the cutting edge. So that was identified quite early on. But fast forward, 2-3 years, and we published our first white paper in collaboration with Dr. Arthur Laffer, who's a supply side economist and one of Kathy's mentors. That was called Bitcoin, a disruptive currency. So actually looking at Bitcoin as more of a monetary revolution than a technological revolution. It was a pretty sort of basic framing of, could Bitcoin serve the three roles of money, and sizing what that opportunity looked like. So that was around 2015. And was really within the same time frame that we had gained our first exposure through GBTC. And then fast forward a few years, we published a second white paper called Bitcoin Ringing the Bell for a New Asset Class, that kind of looked at Bitcoin in the context of traditional asset classes, and deemed it not just investable enough, but distinguished enough to merit sort of its own kind of framework for and separate from traditional asset classes. Which brings me to, I guess, the second part of your question of what's so fascinating about on-chain. It's like for us, while we're primarily focused on traditional equities, crypto being kind of a distinct asset class that has an entirely new framework by which to analyze its fundamentals is really kind of interesting as a sort of shift in paradigm from what we've seen in traditional equities. So the ability to have like this 24/7 global fact sheet that any individual can access at any time, that gives us extremely granular breakdown of the inner economics and network activity, is a really like kind of, I'd say, compelling and new way to analyze an asset's fundamentals. So we're looking at it more from that standpoint of, think the first phase of institutions understanding Bitcoin was like, what is this? Is this really just like this sort of Ponzi scheme for drug lords and criminals? I think we've gotten past that, and now it's okay. I get Bitcoin. I get the long-term case for Bitcoin. I get why you might want long-term exposure, but it still doesn't really have any fundamentals. And that's where sort of the third phase comes in, where it's like, well, no, it does have fundamentals. You just don't really know how to analyze it. And it's because you don't really understand maybe that there's an entirely new framework by which to analyze it. And that's where, on-chain analysis comes in.
No, that makes a lot of sense. And I think, bringing David on just kind of goes to show how committed you guys are to being kind of on the forefront of that. So with that little segue, David, I want to ask you, before we kind of get into some specific research that you guys have done here at Ark, kind of walk us through the earlier days of on-chain, as well as a few of kind of the, on-chain metrics that you've specifically created. You're one of the real OGs kind of in the on-chain realm, and you've been on the forefront of, the analysis from the beginning. So kind of walk us through like the beginning all the way to kind of where we are today. In specific, I just kind of want to highlight a few of the innovations that you've been on the kind of forefront of.
Sure. So I guess technically the field began in 2011 with the creation of a concept called Coinbase Destroyed in one of the OG Bitcoin talk forums. But formally, I think the beginning of on-chain was 2016-17 with former Ark alumni Chris Brzezinski and Willy Woo, who were the first to attempt to come to a valuation of Bitcoin. And their first approach was NVT, network value to transactions ratio, as a proxy of a PE ratio, as we see in equities. Turns out that was actually a study on velocity. But later on, especially starting 2018, when I came into the fold, you could say a golden age of new analysts who thought this were the most interesting takes related to how the Bitcoin economy actually works, relies. We thought that was especially important to delve into what the ledger is telling you at any given time and experiment with the data and clarify it for human diagnostics, right? So from that point, I think the thing that was a great breakthrough at the time was the publication of Realized Gap by Nick Carter and Antoine Lecalvé. That pretty much brought on a whole new array of looking at the ledger in economical terms. So out of that, with Murad Mahmudov, I created the MVRV ratio, which is one of the most popular metrics used today for just having a general sense of under or overvaluation in Bitcoin. And after that, my work kept compounding. As of now, I think I have about a dozen published metrics which are widely used in the industry. And since then, it has been pretty much about educating audiences about what they're looking at a given time, and also bridging the gap that you usually have in traditional markets between, let's say, a retail audience or a retail investor and the institutions. With Bitcoin, one of its main value proposition is that it's fully transparent and pretty much anyone can access that information for cheap or free. And after that, I published with Ark a 3-part series that delve into the whole what is on-chain and how you can segment it or understand it even further, and created a few metrics with them, and here we are.
That's awesome. Whichever either of you guys can take this question, let's do an overview of your kind of pyramid methodology. I think one of the things that you guys have been really good at is kind of taking on-chain, which has been kind of this rough science where we're really early on doing a lot of experimenting. There's new metrics coming out almost every day, at least every week, it seems like. What you guys have kind of done is create this methodology of organizing the metrics into a way that you can use them in an actionable manner based off the different type of market participant that you are. So again, either of you, if you want to kind of take this and walk us through what is this kind of pyramid or layered methodology of approaching on-chain, and how do you guys kind of think through that?
Yeah, I can take this. I think one of the things that we wanted to accomplish with this piece was to answer 2 questions. The first is why is on-chain important, and to whom is it important to? And the question is it depends, right? And it's kind of the nature of the data itself. So when you kind of look at running a node and sort of being able to extract data from the node, a lot of it is really just raw data that then needs to go through a pretty hefty sort of engineering lift to then provide signal to that data. And one of the observations that we sort of made is that the life cycle of an on-chain data type goes through raw data to then highly manipulated data, and as it becomes more and more manipulated, it appeals to a smaller subset of market participants. So the way that we kind of laid out the pyramid was, of course, the lower layers acting as building blocks for the middle and the top layers. And, starting at the lower layer, it's it's this idea of, we're able to diagnose the health of the Bitcoin network at any time. And this is, appeals to any, market participant in Bitcoin, whether they're just a general market observer, whether they're an asset manager, whether they're, a single holder. It's is Bitcoin operating the way that it is operating? And that's anything from, monetary policy to hash rate to transaction count to transaction volume. It's not going to necessarily, tell you where Bitcoin is going in the next 6 to 12 months. It's not going to tell you how, individual users are engaging with the Bitcoin network, but it's going to give you a sense of, okay, the Bitcoin is operating as it is promising it will operate as. So that's sort of the lower layer of, we can use this 24/7 global fact sheet to diagnose network health. Now, the second layer is, takes a little bit of a deeper dive, and it's like, okay, given the nature of Bitcoin's accounting system, given that it is a quote unquote non-productive asset in which the price is the primary signal and the price is really exclusively driven by reservation demand, is there a way for us to, assess the broader buyer and seller behavior of Bitcoin market participants? Here, it appeals to, investors and asset managers, maybe who aren't trading, Bitcoin on a frequent basis, but who might be kind of looking at Bitcoin as where we are in the market cycle, or how, positive news is being sort of responded to by existing holders, or what the, specific, I'd say price dislocations, what subset of the Bitcoin base, has been affecting the most recent price movement. That's where we get into, things like what David mentioned of realized cap and coin days destroyed, which are all sort of interesting new metrics that only exist in kind of the open source Bitcoin network paradigm. So things like realized cap, which can give an aggregate, cost basis of the market, which allows for you to really understand, who is holding and how long they've been holding and at what prices they've been, holding, is especially for an asset like Bitcoin, high signal that you want to derive. And then the third is, again, building off of realized cap and network health. And that is, if you're actually an active asset manager that wants to, have sort of analogous network valuation tools, think of in the equity markets, as David mentioned, like a PE ratio or an EV to EBITDA. Like, you're actually able to further manipulate that buyer and seller behavior to create kind of really compelling network oscillators that might determine, whether or not Bitcoin is overvalued or undervalued at any given time. And so, we're active managers of Bitcoin. That's something that, we've been focusing on. That's something that, David has spearheaded, in tremendous ways. And that's kind of focused on broader network valuation. So, again, I think that's kind of the framing that we're taking it. And then what's good about that framing is, each layer might appeal again to a different subset. So if you're not really interested in actively managing, then you might just be interested in sort of the network health component or the buyer and seller behavior.
David, is there anything that you wanted to add on to that before we move on? I think that was super succinct.
Yeah, I agree. You got it all.
Nice. I'm sure that's not the first time that you've walked through that, so I'm sure you got it down. David, I want to ask you, so, as we kind of mentioned, you've been at the forefront of creating several major on-chain metrics. Kind of walk listeners through, like, what is that process of creating metrics? Is it kind of like you're sifting through gold and you're just kind of, tinkering around, or does it kind of start from kind of like going backwards in terms of thinking about a problem or like, an idea that you have about that you want to figure out about the market, and then kind of like working backwards from there? How does that process of going through and creating an on-chain metric or a new type of methodology work?
Well, I've come at the process from both first principles as a more methodological approach, and also from just an experimental approach, like work and play sort of situation. To give you very specific examples, MVRV came out of a completely first principles approach, in the sense that as soon as I saw the chart, when Nick Carter displayed it in the Riga conference, when he presented it, I knew there was something there. And what he was in effect showing was potentially a reliable floor model or cost basis of the market. So I wanted to get a grasp of how that interacted with network value or market capitalization. To give you the opposite of that, Puell multiple, which is it divides current market revenue by the 365-day moving average of miner revenue. that actually came out of full experimentation and iteration with few first principles, like, okay, annualization is very prevalent, not only in traditional markets, but in Bitcoin is the quarter of the halving cycle, et cetera, et cetera. And I wanted to get a metric that worked both in terms of reacting to price, but also to whatever the activity underlying by miners and the issuer domain coming out of Bitcoin. So I'm trying to integrate all that into a single metric that simplifies, especially visually, and presents actionable information based on those metrics. But like the metric in and of itself came just a Friday night playing around in Excel and just trying to figure out how to integrate all the information into a single presentation, a single package. So it works both ways. I've known several on-chain analysts throughout the years, and they both attack the problem from different angles. You have the more creative type minds like Willy Woo. You have your more engineer type minds like James from Glassnode or so. So I think it's just a way of coming at it from first principles. It has to make sense from that front. It has to battle test over time, and you have to make sure that for the most part, according to your, where you're coming from, it has to work over time and preferably lead price in some way, shape, or form.
Yeah, I think that's a really good point. And like one of the things that you just kind of hit on was that you really need to have a methodology behind it. I think a lot of times you see on Twitter some just like random metrics being compared against each other, just like random ratios of things. There's no real kind of concept that you're trying to, establish through that metric. And I think, as you just said, you need to have something from first principles that you're trying to basically visualize. Cool. And I thought it was funny you mentioned the Excel sheet. I think few people realize. So like my two big influences were David and Checkmate in the early days. And those poor guys, I was just like spamming them in their DMs. And I reached out to David. My first interaction with David is asking, what do you think about approaching on-chain analysis? Where should I go to get started? And his answer was, you should just go in Excel and just start tinkering around with stuff. So I thought it was pretty funny. That's the exact advice that David gave to me, a year ago. It was almost a year ago today.
Those were the old days
Yes.
when you actually had to use Excel
Yes.
to manage all this data. We've come so far.
Yeah, for sure. So with that being said, I kind of want to dive into a few of the actual metrics that you guys have created. Can we kind of walk through a few of the actual metrics that you guys have created at Ark? I think one of the really interesting ones that recently came out was in collaboration with Glassnode. I think in particular, it was you and Checkmate, who's the lead analyst at Glassnode. Correct me if I'm wrong there, but it's this long-term holder deflation-inflation ratio. Kind of what's the methodology that you're describing there, and kind of where is it now?
So that was a metric that pretty much tried to capture the whole concept of inflation versus deflation, right? And reassessing on market dynamic terms if Bitcoin, Bitcoin at any given time is actually in a deflationary state, right? So going back to the concept of long-term holders, which are by definition holders that have stick to the asset for more than 155 days. And there's a whole statistical modeling on why that threshold is very important. We found that when you assess both the potential natural sell side coming from natural issuance into the total circulating supply, plus the churn, the daily churn of long-term holders, meaning how, perhaps that bracket of the holder base releases coins back into circulation or adds coins back into their cohort. Assessing that over time gave us a relative sense of how, when you measure that against the issuance base coming from miners every single day, you get a sense of how, quote unquote, inflated or deflated the market is at any given time, especially from a market dynamic perspective, as opposed to just, the issuance of Bitcoin is just pre-programmed completely, so it's completely static. But there's market dynamic forces that usually inflate the currency for a specific environment, meaning irrational exuberance, right? So what we notice is then when price appreciates drastically in, let's say, a few weeks to a few months, for market effects, economic effects, the Bitcoin actually goes into inflation. It went through that in 2017 and 2021 briefly. And when we get that market environment, it usually correlates with oversold conditions in the market. And conversely, we also notice that when long-term holders keep adding coins into their cohort, especially you can assume that they are absorbing both the relative value of the daily issuance plus other coins in the total circulating supply. So that gives you a higher conviction in saying, okay, this is actually deflationary and there's just not enough coins available in the market for new entrants, right? So if you combine that with, some other metric that gives you new money entering the system, it's a high conviction. It's high conviction on the bullish side. Let's just say that's the gist of it.
Yeah, it makes a lot of sense. I think like the methodology is, I want to say relatively simple, but it's really succinct yet, really clean, and it speaks volumes. Yassin, walk us through what is the short-term holder profit loss ratio? I saw this was another one that you guys said got published on Glassnode maybe a month or two ago. What is this metric telling us? How is it calculated? I know it seems a bit similar to SOPR and kind of the way it, to approach it, but kind of walk us through this.
Sure. So the way that the short-term holder profit loss ratio is calculated is it takes the short-term supply of Bitcoin at a profit divided by the short-term supply of Bitcoin at a loss. And so a ratio of 1, you can think of it, is typically associated with local bottoms in bull markets and local tops in bear markets. Since the short-term activity reaches that break-even equilibria, which is denoted by sort of 1, right? Short-term holder over short-term loss. At 1, you're basically breaking even. When it's below 1, you have the market participants on aggregate who have basically moved the coins in the last 155 days at a loss. And when it's above 1, you have short-term participants that have basically taken a profit in which those market participants last moved 155 days. And so, when you sell off violently below a ratio of 1, you can also see from the chart that Bitcoin typically enters a bear market. So with these sorts of metrics, what's interesting about kind of the nature of, I would say, the more intricate oscillators is that sometimes they're more relevant in specific market cycles. Sometimes a specific oscillator might actually only be relevant in a bear market versus a bull market. Sometimes that oscillator might just be an indication of whether or not we've entered a bull market or bear market. And it's not just limited to, okay, have we hit a bottom and should we buy here? Or have we hit a top and should we sell?
Oh, that makes a lot of sense. And I think you really nicely explained kind of the behavioral dynamics or psychology that's kind of embedded into the metric. And I think it's really clean. Hey, David, last one I want to ask you about before we move on. What is the short to long-term realized value metric? I saw this one sifting around in Glassnode the other day. I think it's another really clean one that you guys created. Walk us through, what is the methodology behind this one?
Yeah, so it's a ratio between the 1-day huddle wave, but weighted by realized cap. So you're getting a sense of both the age and the realization, the churn, the internal churn of the 1-day age band, and divides that between the 6 months, 12 months huddle wave realized.
So it's relatively similar to like the R huddle ratio.
Exactly.
Think of it almost like a short-term velocity to like relative to medium and long-term velocity ratio.
Exactly.
Yeah.
The result of that is whenever it goes below a threshold, I believe it's 0.0 4, correct me if I'm wrong,
Yeah.
you can detect that a bear market is in effect in the sense that the current velocity, the 1 day, is very low relative to the 6 months to yearly average velocity. So that gives you a sense of apathy in the market. What we found is that whenever we have low current velocity relative to mid to long term, a bear market is in effect, which is a proxy for, relative apathy, despondency, a lack of new entrants, a lack of activity, a lack of medium of exchange value proposition of Bitcoin, and so on and so forth. So, the ideal scenario is you want to see momentum at the current instance picking up against historicals with strong holder behavior, right? So if you combine this metric for just having a sense of, okay, there's enough velocity, there's enough activity, now I can have a sense, combine this with perhaps long-term holders and have a sense of, maybe the bullish conviction increases because both Bitcoin is being used as a store of value and a medium of exchange, which usually results in, eventual bull markets.
Sure. So we've talked a lot about on-chain during this conversation. I think though it should be noted that there's other forms of analysis that should be looked at in confluence with on-chain, especially as the market becomes, more nuanced. I think especially kind of in the shorter term, you really need to be keeping up with some of the derivatives market dynamics. I want to ask you guys, what are some of the other forms of analysis outside of on-chain? Maybe that's price structure, order books, funding rates, some of these types of things. What do you check on kind of a day-to-day basis outside of the on-chain analysis realm? And then kind of to piggyback on top of that, how do you look at those things in confluence or how do you synergize those things with looking at on-chain?
I'll take this one. It's very important, but derivatives for the most part work from the short term to midterm, and on-chain works more from the midterm to long term. So I think they're very complementary with each other. In terms of derivatives, of course, we bracket mostly in futures and options. I think for the most part, we stick to futures, especially perpetual contracts, which have the most liquidity and signal from our perspective. Bases in general, both in perpetual and expirational contracts, are crucial, as well as open interest. Not much new, but combined with on-chain, and give you a very robust view on what's going on in the market at any given time.
What do you guys think about the current state of the market? We kind of talked about all the different forms of analysis you look at. We dove into on-chain really deeply. How do you kind of synergize this all together today? What are all these different forms of analysis telling you about, your current market outlook, or I guess I should say Ark's kind of current market outlook for Bitcoin specifically, or broader markets, if you want to touch on that as well.
Sure. So I think piggybacking off of what, the discussion that you just had with David on, okay, we look at on-chain and then we look at kind of the derivatives market and broader like liquidity and sentiment as an additional research area. I'd say the way that we sort of synthesize all of the different signal dependent on the research area is through 4 domains. So we have kind of really, of course, as we mentioned, the on-chain and the liquidity and sentiment domain. And I'd say that that's kind of like core to our analysis when it comes to looking at kind of the short to midterm. And then on the longer term side, it's like taking a step back. It's like actually our biggest sort of top of funnel is making the macro case for this all. So we kind of look at sort of where Bitcoin and the markets broadly fit in the broader macro picture. And when you look at, what's happening today, whether it's with the Freedom Convoy protests and some of the censorship that's being seen there in terms of basically just claiming funds and donations, to some of the implications for crypto in the Russia and Ukraine tension, whether it's Ukraine accepting crypto donations or really Russia being cut off SWIFT or sort of broader settlement rails. It makes I'd say one of the more compelling cases for Bitcoin that we've seen ever. And so, when you combine that with some of the emerging market adoption we're seeing, and that now, it's being deemed worthy of discussion on a monetary authority level, we're really excited about, Bitcoin from the macro case. From the on-chain and liquidity case, and maybe, David, you can touch on this a little bit, but, we're seeing, pretty positive data points on the liquidity and sentiment side with sustained negative funding rates for the last few months. And then, maybe David, you want to touch on a few on-chain metrics that we take a look at really on a weekly to bi-weekly basis, determine where we think we are in the market.
Yeah. So perhaps I'll refer to two. One, the market inflation-deflation ratio, which is very interesting right now. It's giving out the most deflationary state for Bitcoin in its history. This, of course, expands over time, but generally, we've seen one of the strongest holder bases from a long-term perspective in Bitcoin in history. We've noticed that there's just the churn of active coins in the network is just diminishing over time, and the market seems to be reacting to the macro aspect. So what we're doing is, as Yassin mentioned, there's several implications that are pretty much advertisements for Bitcoin at the current world state. Yet we are seeing that getting priced into the asset via a very strong holder base in the last few months. I believe the supply less active for 1 year or more is at 63.2%, something
right
like
near
that.
all-time highs.
It's near all-time high. So we're just seeing by several metrics the strong holder base. Complementary to that, we still see, let's say, relative to 2021, right, or late 2020, a general lack of active entities, for instance, or active addresses, which usually correlates to, momentum and activity, and Bitcoin being used as a medium of exchange, right? There's still some lack of that. That's usually
sorry to cut you off. I think even just looking at like Google searches, you could see that
exactly.
as well.
Yeah. Mm-hmm. Exactly that. So, given that, we're still like on the lookout for that, that spark of activity that confirms aligns with the holder base, right? But generally, both from the macro to the on-chain to the derivative side, it's looking in alignment for, a healthy market environment, let's just say.
That makes a lot of sense. One person who's been dabbling in on-chain, which I think is really cool, is Lynn Alden, who's obviously brilliant. And I think, she really succinctly said, from an on-chain side, from the on-chain supply dynamics, it looks like kind of the fuel is laid out, right? But we're just kind of waiting for that spark. And you see, everything you mentioned, HODL waves, long-term holder supply, illiquid supply based off of, the kind of statistical spending behavior of the coins. You touched on like 1 year plus supply. All these things are kind of showing that, the qualitative aspect of Bitcoin's float really looks healthy. It's just a question of, for that supply shock, you need low available float plus demand. And once that demand starts to kick in, given everything you just mentioned, as Yassin talked about, 3 month plus long spot premium to derivatives, I think there's a lot of things that are kind of signaling. Another thing from the derivatives side, sorry to start rambling here, is the quarterlies, which I find really interesting. I think that as well is kind of showing kind of a cool down in exuberance from the derivatives market.
Actually, that's an interesting point. Like, rarely do you see expirational futures on an annualized basis near backwardation, or like actually touching and getting.
Or inflation adjusted, it's technically in backwardation. But
yeah, inflation adjusted is like the most backwardated it has ever been in history. But even if you do not apply the adjustment, like, it's still a very rare event for a Bitcoin market.
Yeah, for sure. Yeah, I think I know you guys can only say something, but I personally think we're kind of set up for some mean reversion here over the next at least month or so. Cool. Thank you guys for that. And I guess kind of last topic I want to ask you about is, where do you see on-chain in the future? When we talk 5, 10 plus years out, where do you see on-chain pivoting? Do you think it's continually used for kind of, price action purposes, or do you think it kind of evolves into more of this kind of like economic study of the network? And I guess, David, we could start with you, and then Yassin, if you have anything to piggyback on top of what David has to say.
Yeah, I think the future of on-chain is bright. And I'm going to actually steal one thing that you, Yassin, said in one of the morning meetings, I think, which is, what we see with on-chain as the study of the inner economics of Bitcoin will eventually be just the study of economics. I think on-chain is niche at this point, but will become a major component of just economical studies in universities, investment firms, anyone interested in pretty much having a sense of what very important asset worldwide is pricing in and pricing out at any given time.
Definitely. I see it really as kind of the backbone by which everyone is going to be analyzing the fundamentals of these public blockchain networks. There's on-chain often gets a lot of flack for some of the potential noise or some of the obsolescence of metrics over time, and ultimately that's going to evolve. I think that the world of on-chain in 5 years is going to look nothing like it looks today, but the fundamental premise of being able to parse data with this much granularity is a really compelling concept that I think is here to stay. And I think will actually, pressure other asset classes to think in the same way. It's like, why do we only actually get, quarterly reports? Why isn't it a live feed? Or, why do private companies, not disclose some of their fundamentals? So it's going to add this, I think, healthy pressure to transparency that, is much needed across the world. So very, very excited about that. And then in terms of short term, I'll just add one thing is at Ark, a lot of our research to date has been kind of this top down evergreen like content. So something like the on-chain framework, we hope will, stand the test of time, but doesn't necessarily appeal to specific market conditions at a specific time. And so what we're working on is, okay, how can we provide, I'd say, more timely market commentary that brings in all of our research areas and synthesizes it into, some sort of report similar to how you might get a quarterly earnings report. So that's something that we're actively thinking about. For those who are listening, stay tuned. But we're kind of really excited about how this is going to kind of come to fruition relative to what we're doing at Ark.
Also, if I may add to that, we have very interesting research on-chain and crypto-related stuff coming up. So stay tuned for that as well.
Yeah.
I'll definitely be keeping a close eye out for that, as I'm sure everyone else listening will be as well. I think that was brilliantly said, a great place to kind of wrap it up here. I just want to say thank you so much to both of you for coming on the show. This was awesome. I mean, we covered everything I wanted to talk about and then some. So really, really appreciate you guys taking the time out of your busy day to come on and jam with me. Before we wrap up, I want to kind of give you a little plug, if you will, to mention any last words that you have to say to the audience, as well as be sure to leave your Twitter handle and anything else you want to link to Ark. Where can people go to keep an eye out for some of that research stuff that you mentioned? We'll start with David and then Yassin.
Sure. You can follow me, Puell Ark on Twitter. And for research, you can you can go to ark/invest.com, and that's where you pretty much have the hub from everything crypto and the other 4 innovation platforms we cover.
Yeah, and you can follow me at Yassin Ark, and I'll leave with maybe a few words on you, Will. You're just crushing the game, and I think that you're emblematic of what it means to put in the work and have that work come to fruition. I think, all of us in many ways like broke through on Twitter. Twitter is an extremely meritocratic system. And I think you're an inspiration for a lot of up and coming people who are interested in the crypto space, who want to break through. So, really excited at all the success that you're seeing, as a true testament to, what you can make out of this whole situation. So congratulations to you, man.
Thank you. So you're seeing that seriously means a lot coming from you, man. And I look up to both of you guys. So I really appreciate the kind words. With that, we'll go ahead and wrap up. So be sure to check out the links that these guys mentioned, and check out all their work. And again, keep out a close eye for the research pieces that David had mentioned that are coming soon, because I know I will be. So take it easy, guys. Appreciate the time.
Thanks, man.
See ya.